Hello everyone, welcome to the channel. My name is Fuller Kamara. Today we're in chapter 29, recording deposit transaction. So in this chapter, we're going to cover when do we normally use deposit transactions and also how to record a deposit transaction. So sometimes clients receive deposits that are not part of customer transactions. For example, refunds, cash contributions from owners, or proceeds from loans. Adding these as income deposits could lead to confusion and inaccuracy with future tax payments. Deposit transactions are any funds coming into the business that are not subject to sales tax or income and don't need to be matched to a sales receipt or invoice in QuickBooks Online. So when do we use deposit transaction? We use deposit transaction in the following ways. One, when we receive funds from loan proceeds or cash contributions from owner. Then two, when we get refund from a vendor and want to record it directly against the expense account or to refund receive income account. Three, when we don't want to record income using sales transactions, that is, we don't want to use invoices or sales receipts and want to record the deposit directly to the income account. Four, we also use deposit transactions when we receive a refund from a tax agency and need to record it to reduce the tax liability or expense account. Five, we also use deposit transaction when an employee reimburses the company and the client needs to record the reimbursement against the employee loan receivable. That is, if we have a loan receivable for the employee and then the employee gives us a deposit, we want to record it against that loan receivable. Clients can also use deposit transaction workflows with negative deposit. This could be a bounce check, like when we had a bounce check from customer, or when a customer's refund amount exceeds the amount they are depositing. So in those scenarios, we can use a negative deposit. So now let's record a deposit. So let's go to plus new and select deposit, bank deposit. So once we select the bank deposit, you can see on the top side we have the pending bank deposits that are pending to be deposited in our bank account or in our checking. So these are currently payments that we've received and recorded in our undeposited funds but have not been deposited in the checking account. So that's why we're seeing these two transactions. But in this case, we want to record a new transaction. That's why we're going to utilize this add funds to this deposit instead of the top, because this top, which is select payment included in this deposit, these are already recorded transactions in our undeposited fund. It's just a matter of checking these check marks and then select save for this amount to be deposited in our checking. But in this case, we are going to add a deposit or add funds to this deposit. So let's say, for example, insurance. We want to record an insurance that we receive, a refund we receive from the insurance company. Let's say the insurance is Amy. So now the account, which account relates to this? So we can select the insurance account. If there is any insurance account, we can select it because we want to match this deposit against the insurance. Okay, so now let's say insurance. So we select the insurance as the account. So whatever account that the deposit relates to is the account that we're going to select. Let's say this deposit was for interest income. We should have selected interest income from here. Then the vendor or whoever will receive this deposit, I mean the customer, if it is a customer, is the one that we select from here. And the account, if it is from owner, we would have selected a different account. Let's say owner's capital. So any account that is affected by this deposit is the account that we select. Now for the description, we can still say insurance. And the payment method, how did we receive this amount? Is it through a cash or American Express? Which method of payment? So in this case, I can just say check. The check number, we can say 1, 2, 3, 4, and the amount, let's just say 500. So now we've entered the amount. We can add a memo. In this case, I would just say this is a deposit And once we've entered all the information that we need to add, we've entered the date, everything. So we can just click save and new. So now we've saved the transaction. So now to check if our transaction was recorded correctly, or if we want to see the double entry that took place, how QuickBooks recorded these transactions for us, we can click this clock icon here close next to the bank deposit. So once we click that, it will pull all the recent transactions or the recent deposit. So this clock icon is available on any screen that we're currently on. So if we're in the invoice screen, then the recent transaction will relate to invoices, recent invoice transaction that we posted. Okay, so in this case, since we're in the deposit window, that's why we can see all the recent deposits. So here, let's select the dates. We have 9/25 and the amount was 2,500. So now we can, if you look on the bottom, you have the option to print. We have make recurring. So if you haven't seen our recurring transaction tutorial, I advise you watch that video to know how to record recurring transaction, because it helps in the automation of QuickBooks. So in this case, we click more. So once we click more, you see we have option to delete this deposit. We also have the option to look at the audit history. Then we can select the transaction journal. So the transaction journal is there to show us the double entry that were recorded. So you see, this is our deposit. This insurance is what we recorded as the additional fund. Remember, these other undeposited funds, these were the transactions that were already recorded previously that we saw, those two transactions on the top. So if I go back to the deposit, these are the transactions that relate to the undeposited fund. So the one that we recorded that relate to this refund, that is the refund from insurance. This is the transaction, the 500. So let's go back to the journal. Let's see. So in the journal entry, we can see the journal entry that was recorded. So here, QuickBooks Online has recorded a debit to the checking and credits to the insurance. Okay, this is going to reduce, because this insurance account is an expense. It's going to reduce our insurance expense because this is a deposit. So if we had recorded this in the form of like an invoice or sales receipt, this would have been subjected to a sales tax, which is not correct, because this is not a sales transaction. This is a refund that we receive from the insurance. So it's not subject to tax. So that's the reason why we recorded this. So now it's going to reduce our expense, our insurance. So now if we click the insurance, in this case, we can see, you see the account type is an expense. So now if we click credits an account that has a debit, meaning that account will be reduced. So let's say because we know expenses has a debit entry. So now that we've credited 500, let's say the insurance account had 1,000. So now the insurance account will be reduced by 500. So that's the double entry that QuickBooks has recorded. So for the undeposited fund, these are just the normal entries: credit, undeposited fund, and debit checking. So you can see the total individual is, this has 500, and then we have all the other entries. But these two, if you add these two together, should equal to this one debit. That's the double entry that QuickBooks has recorded. That's the end of chapter 9, recording deposit transaction. Thank you for watching. Please don't forget to subscribe, like if you like the video. See you in the next video. Thank you.